Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. I am joined here by Dave Lukas. Today is the day before tax day. It is the 14th of April in 2025. And man, what we've seen over the past 2 weeks, I guess we've seen before. I mean, it's not like this is old hat. You know, every time is different and it's always exciting and it's always, kind of wakes you up at 2 a.m. kind of stuff. But we seem to have gotten past this, and I'm wondering if we're past the worst of it, or if we're going to get a second flush later on in the next month or two.
Yeah, I'll tell you, it feels worse than it looks on paper. I mean, like, what are we up 100% still over the last 3 or 4 years, right? Overall in the market. So it does feel worse, and I think it feels worse this time around because everybody's looking for like there's been very clear catalysts in the past, right? To where like, okay, that was the catalyst. The catalyst is being dealt with now, or it's over, right? And then we're moving on, right? Like COVID, very clear catalyst, action taken. Now we're moving forward.
Right.
Now it's like catalyst, no catalyst, like
Yeah.
it's like every day, right? And like even this weekend was crazy. This weekend, like it came out like something about they're going to exempt all like semiconductors and electronics and all that stuff from tariffs, right? Like that hit the tape on Saturday. By Sunday, it was like, no, that's not true. Oh, but yes, some of it's true. But well, it's going to be a month or two. And I've said it like the messaging of that, the way this has gone has just been absolutely terrible, which is actually a surprise for, this, for the president of who he is. Like messaging has always been a big thing that he's actually had more of a strength in. So that's, I think, what this is happening more than anything. It's just, there's not a clear message or strategy of how this can go, and it's not laid out into the future. So like, every day is an adventure. That's kind of where the markets are. Today's a good day though. Had a nice bounce this morning, gave back a lot of it, but now have at least as of now, regaining some of it. So we may be finding a short-term kind of footing. I think you and I talked last week, and I think it was I think and you can show this on the charts. We had said about 5,500 on the futures was a spot that we would expect markets to get smacked down from. And lo and behold, that's where we got to this morning, right? Just up to almost 5,500 on the ES. And that's when, the sell orders came in. So I think that's kind of your level for now, that we may be sitting there waiting to try to push up, right? Prior support becomes resistance. So
Yeah, last week when we were last Monday was actually the worst of it, because it wasn't a key reversal candle, but it was a reversal candle. You can see that it made a lower low and then a higher close versus the Friday before it. Friday was particularly bad. So Thursday, Friday was terrible. Wednesday, Thursday was bad, and then Friday just sort of made things appear like there's no end in sight. But we did close higher, which was the first key. And then the next day comes along on Tuesday is more of a like, hey, we're going to fade everybody. And then, the Wednesday monster comes along, which was that. But we talked about this level here, and that is the 50% fib of this entire swing, as well as that support floor. So this is the constant thing that we're looking at. Former support becomes new resistance. And so we've hit that level on Wednesday. We hit it on Friday. We hit it once again today. And it's what we're expecting, I think, in the meantime, is something like this. So it would make sense to consolidate underneath there for maybe a week or two. Okay, if we get some type of certainty, then my sense is that 5,600, or on the futures, it's probably going to be about 5,650. That's where the next volume profile, high value node, this is the point of control. So if I were to bring over a volume profile node, you'd see a big spike right there. And that typically is where we find people. And if you want to understand why this happens, it's people that went long over here, people that went long and are thinking that the price is going to go higher. They've lived through all of this carnage and they swear to themselves. They genuflect, right? They get down on one knee and they say, please, if the price just gets back up to 5,600,
I'm getting out.
I'm getting out. And so this is what happens. This is why the point of control tends to be a point of resistance. If you fall through it, it tends to be resistance back on the way on the upside. So the first level again on the ES is 5,500. We've hit that 3 times. It's already proved itself to be resistance. But eventually, if we do break through that, it's going to be about 5,650, and I think that will be probably the main one that's going to be tougher to get through. And so what we talked about last week was either one of two things will happen from there. Either, as you say, if this is more just policy driven, if this is more of just a communications problem and uncertainty based on that, then we will, when certainty comes back in, we will, I don't know if we're going to V-bottom, but we will resume the uptrend.
There's a few key things. I keep this chart up because there's something else I want to point out too that is important to look at here. So 2 things. Brewhead, yeah. Well, one true social post away, and yeah, we got that. Now we could be, now we got the next one, right? And the next one I think at this point is a China deal. If a China deal struck, that's going to send markets ripping higher, right? The rest, the rest is going to be noise and stuff until that is sorted out, right? So I think that's the big thing right now that we have to wait and see. The other side of this though is the damage already done, right? So if the market sniffs out that we're going to go into a recession, which this isn't going to be till later in the year, but if it does, typically you're going to go 15-20% lower once the market starts to sniff that out. So the question becomes is like, do we get the rally now, and do we get anything out of China, or does that lag on, right? And then do we start to get some signs that a recession is going to happen? Because remember, right now, like everybody knew tariffs were coming, so they pulled everything forward, right? All the supply and everything's been pulled forward, but now like these tariffs are on China. So anything now, like if you're trying to build up inventories, you're paying all that money and that tax, or your supply chains are getting, definitely messed with in a big way, right? And so, I saw a thing the other day. There's a coffee company that sells cold brew. Bill Ackman actually is a company he invested in. He put out the letter from the founder, and it was basically saying that, well, in order to be competitive with everybody else, we've had to outsource to China. We have to outsource our glass bottles that we use to China. And now, like overnight, they're 50% more. Now, like our margins are X, and we've got maybe a few percent left, but now we also have to contend with a few other, costs that are happening. So we can't source coffee from the United States. They don't grow it here, right? Like they got to get it from Peru and these other countries, and now there's a tariff on it. So like that's the type of stuff that a lot of companies are dealing with, even if you're American based or US based, and you've had to be competitive over the last however, decades. You've had to outsource some of this stuff, if not all of it, right, to compete. And now you're kind of stuck, right? So what do? You have to, start finagling and figuring it out. But at some point, maybe you got to pass some of those costs on, right? And so these are things that, again, macro stuff takes a lot longer, right, to show up. So like, not going to see it this quarter, probably not going to see it next quarter. But by the time we get into the back half of the year, we might see some of that if this prolongs, start to see some of that show up. And that's when the market may sniff that out. Now, Doc, if you clear some of your beautiful drawings, one thing that I've been looking at more lately, and I don't even do this in Thinkorswim, I just kind of do it on my own, but inverse charting. So if you were to flip this chart on its head, do a 180, right? And flip it the other way, what do you have? You have it looks like an uptrending market that is now pulled back to a level of support. And what typically happens from there, you go back higher in that scenario. Well, in this case, if you're looking at it from that standpoint, it's hard to, you have to visualize it, I guess. I don't know if can Thinkorswim flip it or not. but down is where the next leg would go, from that, right? If you were following, if this was like an inverse chart. So that's another kind of thing I just have in the back of my mind. Like, I'm looking at it from an inverse standpoint, and it's kind of interesting that way.
Well, here's the
Yeah,
SDS,
SDS. There you go.
which is
That's a good
not
way
the
to look at it.
greatest chart to use from this.
It's not the best, but
but
it's,
it's
you're
but it's
visualizing what I'm saying. If you
yeah.
flipped it upside down, this is what it looks like, right? So it looks like you've had a big breakout. Now you've pulled back to the level of support. So what happens next? Typically at support, you go back up, right? Could you send it again? And Siri wants to know. So, go ahead. And I mean, you can kind of talk more about this. You probably do more of this than I do these days, but
Yeah, there was well, I mean, the polarity has changed. So you could look at this like, but this is a former downtrend. This is the only difference is that the actual S&P was a former uptrend, which has just gone through essentially an ABC correction. So if we just look at the old SPX here, this is I mean, if we want to talk Elliott wave, we've got let's see. We can call this 1, 2, 3, 4, 5 ABC. So we can play that game. This is the problem that I have with Elliott wave, though, because you can find whatever you're looking for on a chart, right? Yeah. You can find whatever you want, and so the Elliott wave guys, which are perennially bearish, and they're always thinking that the market's going to be at zero. So it's sometimes that. But I do like the idea of the 5-wave pattern, because this is typically how things go, is the smart money gets on board and gets the initial push, and then it gets faded and everybody thinks, well, this is all done. And then this is where the institution, the institutions tend to get on board as wave 3 here. And then you get into some nasty stuff in wave 4. And this is where retail gets on board. This is where retail gets on board when it's safe, right? And then, of course, they get chucked off. And so it would make total sense for us to go through the same kind of, begin wave 1 off of here. So wave 2 is coming up later on this year. And that is going to be, like what we talked about. I think that is going to be the real, where we get up to. So in the short term, I think we may consolidate here. We may consolidate in this area, and this may be extended. So Dave and I are both looking at like, okay, how can we just go to town on this area, because there's going to be huge amount of confusion, and I believe price compression within here, and I think volatility will also recede. And then it's going to be a question of whether it breaks higher on certainty or breaks lower on economic performance. So if the market's starting to price in a recession, like Dave said, it will.
Yeah,
will start
we're also
to go down.
up to this level, and we've got a fully charged daily chart again, basically.
Oh,
too.
Yeah. Now, what the big deal last week was rates. What's your sense on rates? What's going on here?
So, I mean, the bond market, when the bond market speaks, everybody listens. The bond market's the biggest, most liquid market in the world. It's in control. And I think last week was just an incredible example of that. Now, this wasn't the bond vigilantes or any of that type of stuff, right? You've probably heard that before, but this was more like the rest of the world with all this going on, and China probably to some extent too, basically is backing away from dollars, it's backing away from U.S. debt. So they're selling out of their debt, and they're flooding the market with it. So when you flood the market with a bunch of bonds, what happens, right? The price of those bonds goes down because you have so many more out there, which means interest rates go up. So there was it had to be countries, major players, maybe a few big hedge funds having to unwind because of the what's called the basis trade, which is a way to leverage up to 20x on trading between futures and the price of the bond. And as you like to say, it's kind of like picking up nickels. And for the most part, a steamroller isn't there, but when the steamroller does show up and you're trying to pick up nickels, you got to unwind it quick because of the leverage. So we saw some of that last week, and that's what pushed rates up, and rates were, I haven't looked today, but they were over 4.5, on the 10-year coming in today. The 30 years flirting with 5%. It's the same thing we kind of talked about before. It's,
Mm-hmm.
we're 37 trillion in debt. So, do you want to lock your money up for 10 or 30 years and not get paid well to do it? And if you think that there's instability coming from the US with trade policy, right? What do? You unload and maybe pick up more gold, which is why we've seen gold really kind of going bonkers. I think China itself was sending a message, because they own trillions of bonds, so they can unload a few hundred billion and flood the market, drive those rates up, and they can turn around and they can buy euros with it, which is what it looked like has happened, right? So they bought euro bonds basically and euros, and put the money there, basically saying, look, US, we can mess you up, and your whole wanting to refinance debt at lower rates, we can make that impossible for you. So I think that's a little bit of that retaliation.
I heard though that China only owns maybe 2% of our debt, and it was mostly Japan last week that was doing all the damage.
Well, Japan too was as well, because Japan's in such a problem, right? The carry trade's still out there, guys. The same thing that happened in August last year never went away. That's what caused the same type of movement we're seeing now in August of last year. That's the carry trade, and that's where you borrow cheap out of Japan and you use it to buy or invest in like U.S. assets, right? But the problem is Japan's gone; their bonds have gone nuts, their rates have gone nuts. Because remember, forever it was like 0%, right? Now they're even to go to 0.5% for them or a percent is just crazy, right? And that really unwinds the carry trade. So Japan, though, to bring rates down, probably having to sell some of the bonds and stuff too to deal with some of the things happening in the trade markets and all that. So that's the whole thing. You've got a system that's really since 1971's been built, right? And when you throw a hand grenade into it, all kinds of things get messed up, and that's really what happened last week. Is the bond market screamed, we don't like this. And, frankly, Trump came out and relented some because of it. So we'll see if it, continues or not.
Yeah, today's rally seems mostly built on the semis, which would be insulated from the tariff thing. So,
well, you had that. Some of that news is, like I said, over the weekend, it was 100%, then it wasn't, then it's like in the middle. Like, so I guess it's not as bad, right?
Yeah,
but also NVIDIA did have that announcement today that they're doing, I think 500 billion in investment for building the chips here, and they're going to be building all, their entire chip cycle or product lines and everything here in the U.S.
But how long is it going to take them to?
What's that?
How long is it going to take them to build that?
I don't know.
Yeah, because like around you, like Intel has been threatening to build something out in Licking County, but I don't know if that's ever going to get off the ground.
Well, we just had somebody, Meta just canceled a data center, I think.
Yeah.
So out here, where I'm at, guys, in Central Ohio, it's become, a lot of people don't know, a lot of the T1 lines and all the fiber and everything comes together here just north of Columbus, Ohio. So everybody and their brother has data centers here. And they're building more. And Intel was going to do a $30 billion investment. But yeah, I don't know if they've put that on hold or not. But yeah, so we'll see.
Yeah, a lot of that actually happened. That went back to the old CompuServe days, because CompuServe was the internet before the internet came along. In a way. So that's where kind of that whole thing got started.
Well, and two, a lot of people don't know, just, while we're on the subject, not that everybody cares here, but Chase's second biggest footprint outside of New York is right here in Columbus, Ohio too, just north of Columbus, actually 5 minutes from where I live. So there's a lot here for that. So it's an area where you see a lot of that. It's a good pulse. Like I watch like the investment and stuff, coming in and the growth of it, because that kind of tells me who's really, investing hard and what their kind of future looks like from them. So Microsoft, everybody's here. So it's an interesting place to kind of watch.
Are there, hey guys, we're going to be here for another few minutes. If you have any questions, if you want us to look at any particular stocks or charts or anything like that. So again, let us know.
Yeah.
You
You
kind
do
of
your weekly Bitcoin overview.
yeah. Hey, I can do that. I can do that.
It's had a nice little bounce
This
out of the
this is
weekend.
actually really interesting because it's right at a very important level. So one of the things that I do is rule number 3 of fractal energy trading says that declining patterns will always eventually break to the upside. It has to happen unless this is going to go to zero. You will eventually have this pattern break that upper trend line and go higher from there. Now whether it goes to just a lower high and then rolls over, we don't know yet, but we're just going to play this one swing at a time. So again, we're right at this. It's consolidating. It's doing a little high and tight flag right at the trend line. So I wouldn't be surprised to see on any kind of piece of positive news a break from here, and it's got to get above about 88 to begin. But here's the main level right there. It's about 96,000, and that's where we're either going to find out if it's a contender or a pretender for 2025. So if you go back and if you look at like a weekly chart, you can see that really we haven't shifted polarity since this thing it bottomed out around the FTX debacle, which blew up back in 22. And we've started on this bull since then. Beautiful monthly bull flag, great flagpole here, and this is still what I would consider to be a consolidation. Now it should break from here, but if it only breaks to a lower high, and if we break this trend line, then it's all over. Then we have to start all over again on the next bull market, right? So it's going to go through the next bear cycle, and we just don't know at this point. So as goes Bitcoin, so goes the rest of the crypto market. But the thing that I've noticed this year, and I talked about this with my subscribers, is that I did not think that there was going to be the same type of altcoin rally. So what typically happens is with crypto, you get initially Bitcoin takes off and breaks into the clear, and then all of a sudden it gets expensive, and so everybody goes after all these little, for lack of a better term, shit coins, which are really super cheap. They're usually pennies or maybe even $1 or something like that. So they go into these things, and
like Fartcoin.
Yeah, like Fartcoin. It's exactly like what happens in the equity markets, because what happens in the equity markets is the former leaders start to fail, and then everybody shoves money into garbage. So the crap rises to the top at the very end of a bull market. So again, same thing happens with crypto though. So all the altcoins, but I believe this is going to be different this time around, because in my mind, I think this is where people are getting to be a lot more savvy, where 8 years ago, you could get an initial coin offering like Dave. You could go out and form Dave Coin, and then pump it, and then you could pump and dump it, walk away with $1 million, and nobody's going to come after you. Whereas now, that's not going to happen.
Right.
I mean, this is what happened to Hawk Tua.
Yeah.
Right. So to bring up a great reference for that. So, but people are looking at these coins and saying, what's the intrinsic value to them? What is the purpose of this? And so if it's just a meme coin like Fartcoin or Pepe or something like that, it may have its moments for here and there. People may pump and dump, but it's never going to have any intrinsic value. It's never going to get anywhere. And this is where I think in 2025, I think we're going to have a completely different. I saw the same thing happen back in the late 90s with .com stocks. Yeah. And so it's just the same cycle going over and over again. Human nature doesn't change.
Yeah. Yeah, and the dust settles. You typically have the best ones are left, and then that's what drives it for the future. So,
right. So we may have just a few. We're gonna. What I'm excited about though is that we're going to be tokenizing all kinds of assets. So if you think about okay, there's going to be a real estate community that's like down in Orlando somewhere, which they need capital to come into. And instead of going through traditional, like a bond fund or something like that, what they will do instead is they'll tokenize it. And so you're going to see more and more, because it's so quick and easy. It's frictionless. Yep. you're going to see them tokenize just about every type of asset that's out there, which does have intrinsic value, and this is going to be important. So
yeah, and I think that's where I think Ethereum will come into play some more.
right.
I think Bitcoin's movement is going to still be, I mean, it's still be big moves, but it's going to be a lot smoother than it has been in the past because the institutions are involved now.
It's going to be more like an actual currency.
And it, you know, right now it moves like a stock. It moves like I mean, Bitcoin and the Nasdaq move a lot similar to each other right now.
Yeah.
I don't know if that'll decouple at some point again or something like that. But right now, they, you know, if Bitcoin's down overnight, you can make a good bet that the Nasdaq futures are going to be down. You know what I mean? Or up based on it. So
yeah, after they added the ETFs, it really became
exactly.
part of the risk asset classification.
Well, and the Ethereum ETFs are coming out now too, so that's going to be interesting to see what it does to that.
Yeah, with options too, so that'll be awesome.
Mm-hmm.
So yeah, this has made a big change in my portfolio since the IBIT came out with options back in November. I've been very active with those, and so you know we've dropped 30% in value. My account's still up. You know,
yeah, sure. Yeah, give them an idea of a trade you do, just so that if somebody's looking at IBIT, they can have an understanding of that. The skew is really good. The options are really good.
Yeah, let me take a look here. So if I look out at, I've got a Tasty Trade account where I've got a lot of IBIT stuff here. So I've got cash secured puts that are on here, which are going to expire this Thursday. It's down at the 42 level. Right now, IBIT itself is at 48.3. And so that is going to expire out of the money, and that's going to be worth, you know, $134, you know, just for one contract. I've got covered calls out there through the middle of May, and those are already up 194. So, I mean, you can just consistently create these little cash opportunities with different trades, you know, specifically timed. So even though you've got a market which is generally sort of trading down like this, you can still add positions. I've already closed out half of this long strangle on the long puts. I already took profit on those, looking for a bounce back up, which is a kind of a lottery ticket on that one. So it's just really easy to trade these. These have good options on them. They're highly liquid, and I think is a really nice way to trade Bitcoin on our existing markets.
Yeah.
So there you
go.
So
any questions, anyone, before we have to drop off here? I think, you know, for this week, I think the message is really, you know, we've got some, you know, resistance probably button up against. We'll see if we can get through it. It'll be a shortened week. Today's the biggest volume day I'd expect, right? Friday, remember, is Good Friday, so there's no trading. And so then we have, you know, probably swivel chair day on Thursday, as we like to call it. So the real days of trading will be, you know, today, tomorrow, and then it'll start to be low volume from there, right? It'll be algos more or less. So we'll see if that moves anything, because, you know, lower volume does sometimes produce bigger moves, but we could just settle in and just kind of hang in a range here, a small range for the rest of the week, and be done.
Okay. Looks like we're good. So hopefully this will be a quieter week than the couple that we've had prior to this. And then, you know, go into a nice little spring consolidation, which we will prosecute with vigor. All right. Thanks, everybody.
Thanks, everybody.
We'll see you guys next Monday. Adios, folks.
See you then.